I'd like to welcome our final speaker, last but not least, Cerasela Stancu from Envirostat. I guess I met you a few years ago when we were doing a bit of arranging an event for the New Zealand Agricultural Resource Economics Society. And at that event, you were talking, we were very interested in, again, about land use transformation and how we can engender that change. And Cerasela was involved in a piece of work looking at impact investment and its role in change. Then I guess we met up again this year. Again, Cerasela has been doing some really interesting work, linking, I think, to Mark's thing about biodiversity credits and this sort of things as well. So I'm really looking forward to hearing your presentation.
Thank you very much, Alan. Very good to be here. My name is Cerasela Stancu. I'm the Sustainability Director at Envirostat. We are a small natural resource advisory and project development company based in But actually, this is quite nice to be in Lincoln because I used to work for Manaki Whenua for a decade or so. Sorry.
I'm going to lose my IT job, I think. So, sure, that should be it. Yeah.
So it feels in some ways like coming home. You know, every time I come to Lincoln, I have this nostalgia from 20 years ago. Now, Alan has given us a bit of an interesting session at the end of the day to talk about, you know, what's happening in this space of natural capital and how we make decisions in relation to our nature assets and really nature and biodiversity in New Zealand, in Aotearoa. But more important, what is the connection with the real economy and with our finance sectors and so on. And it is a lot happening in that space. And I work for an organization that, by and large, I would say what we are trying to do is to really tap into private capital as means or new resources to bring to bear in the face of the major challenges that we have as society. So when I talk about nature-based solutions, it's really about, you know, looking at how we work with nature to be able to, on the one hand, really respond to climate change, but it's also really about, you know, the connection with us as people, the connection with the food system that we learned so much this morning. And so that's partly. Is it here, right? Ah.
Sometimes you have to just.
Ah.
Yeah.
Sorry. And I just want to start to, you know, I listened to this quote very recently, but this is something that Pavan Sudkev, who is, you know, well-known economist, talks about all the time. Is, you know, we value nature because we use it and we interact with it all, you know, all the time as people in different ways. And it means different things to different people. That's also an interesting thing about, you know, what nature is and how we relate to it. But it's also the reality is that we actually lose it because it's free by and large. And, you know, in New Zealand economic system in particular, not that I'm here to advocate for that, nature is, it's recognized in terms of our dependency on it. We also understand some of the impacts that we have, but those quite often are not actually quantified in monetary way. So hence this, you know, the point that Pavan is making, that we often lose it because it's free. What I want to talk about is just a little bit big picture, what's happening in New Zealand, and especially for our overseas guests. I'm sure that you're going to hear this, you know, continuously, different perspectives, different angles. And then I'll look at, I don't know, a few examples it's maybe, you know, I might be a little bit biased. I'm going to try and look a little bit at what are the solutions, you know, why are we even looking at nature markets? Because, you know, none of us, I have a background in environmental management, I worked as an ecologist. I don't set out to deal with nature markets because it's interesting, but it's just simply because it's one of the tools in which we are pursuing some solutions. So I'll try to look through that angle and lenses of, you know, are there solutions? Can we think differently? Can we come up with new ways of resolving what's really massive challenges ahead of us, and especially of those that will come after us, you know, our kids and so on. And a bit on the way forward, and really try to move through this very quickly. I like often to talk about this, you know, we have different ways of measuring the, you know, nature, how much we have, countries' emissions. I come from Romania, and, you know, I worked a lot on policy in Europe, so I always like to compare. But this is a graph, when we think about New Zealand, that tells a lot of things into one single visual. And it doesn't mean that we all have to agree that, you know, ecological footprint is the best way of actually measuring things, but it is a good way of actually, I don't know, bringing a lot of data and try to communicate in a way that is relatively simple for anybody to see, right? So what we're looking, you can see with the red line in terms of our ecological footprint, which has to do really with our interventions to try and manage impacts, right? Our environmental policy and so on. You can see that, you know, we have times when we're better and not so good, but our biocapacity is going down. And, you know, that's not changing. Even if we improve our environmental performance, so the ecological footprint and so on, we are still drawing on natural capital continuously because of the economy that we have, because of population increase and so on. So our trend is not in the right direction. And this is also another study that was actually commissioned by MFE. Many of you, again, are perhaps familiar with planetary boundaries. It was, the same methodology was applied for New Zealand, and it tells us the same things, that, you know, there are boundaries that we've exceeded. And it's a question of how do we actually not only operate within safe boundaries, but how do we actually walk back some of the boundaries that and thresholds that we've crossed. And I picked on this more of a land-focused data snapshot because this is one of the first government reports in which we openly talk about externalities. Externalities is not, for economists, is perhaps a common language, but it's not necessarily something that we want to talk about in New Zealand. And, you know, we haven't really done true cost externality studies at economy level, at regional level, and so on. And I think, Mark, in some ways, the work that you've done in Bear Plenty, it almost kind of brings a lot of externalities in, and suddenly, you know, provides quite a different view of the economy. You can see in here, you know, some of the numbers, if you want, that illustrate the challenge that we have, including the fact that, you know, from the Auckland floods and the cyclone that we had last year, the year before, we are looking at massive $9 to $14 in recovery, billions in recovery costs. These are very big numbers for the economy, and somehow we're going to have to, you know, face up to this. But we cannot, in other times, really allocate finance and government investment and so on in amounts which are much smaller. We cannot make that happen, but we will do, and these numbers will increase most likely if we look at scenarios in terms of dealing with extreme events. And some other numbers in terms of things that we're losing. You know, I'm looking, you know, one of my favorite topics, which is freshwater wetlands. We are still draining in parts of New Zealand freshwater wetlands, and we know that when we try to recreate them, are bloody expensive to recreate, you know, and they're not going to function as well as native ecosystems. So why we do this kind of silly things, you know, why the policy can be different, why our collective knowledge and values can't change when, you know, we know that actually even in economic terms, it's not a good thing to do. Connecting, and I'm going a little bit on this investment pathway. We finally have some numbers for New Zealand in terms of how big is our investment conservation gap. And it's great to hear that, you know, Autograph Circle will be doing something in that respect as well, because we often, even when we talk to the banks or those interested in investment, we get this question. So how much do you need to actually really protect well the environment and do all the conservation that is needed and so on? And often we can't, you know, we can tell how much is the budget of MFE, Department of Conservation, but we often cannot connect a vision that we have for our nature and for our biodiversity back to how much do we need to invest on a yearly basis. And this is an attempt by WWF, I think they worked with EY on this, to put some numbers. And you can see currently, we think that our current spend is around 4 billion. But if we were to actually pursue the targets that are on the screen, we will need, I don't know, 6 or 7%, that amount of investment. Money that we do not have from a public perspective. Therefore, the role of private sector is really important. How are we going to be able to access more resources from a sector that know how to place capital in the most efficient way? And, just a little bit of acknowledging OECD as well, in terms of interesting work and how New Zealand ranks. We really do not experiment enough with economic instruments in New Zealand. It's a space, we've done great things like ETS, other countries are looking at us in terms of the use of ETS to achieve, climate mitigation and so on. But overall, in New Zealand, we are not that experimental. So we have, in some ways, I would say this is the opportunity because we haven't put a lot of economic instruments in place. This can help as we look ahead at challenges. But you can see, for example, on biodiversity taxation alone, and there is a group of us now led from University of Otago. We're looking at this idea of can we do a biofin methodology, understanding the financial needs for biodiversity in a very complex way. We are looking at this concept of will a biodiversity contribution support investment in biodiversity over the long term? Do we need to think about some level of, not taxation, I would say, because it has this negative connotation, but a long-term contribution? It's a bit like how, I think, my friend Ian Herbert likes to say, a bit like how we contribute to our retirement funds. We start quite early, and it's with a reason and with a purpose and with an expectation of return in 40, 50 years. So we might think in that way as well. What drives some of this? We're coming to this point now in terms of economy and what happens in overseas markets and so on, that, transparency, accountability, all these principles, values, and so on are kind of coming to a forefront, and they're driving a certain behavior, not just of corporates, I would say, but even governments, our ability to measure and so on. And you can see there the variety, if you want, of initiatives, both in the real economy as well in the financial sectors, trying to, force measurement with the hope that, once we have measurement and we have disclosure, we'll also have better management of the issues. And so that kind of comes back to New Zealand. We already have a pretty, I wouldn't call it advanced, but we already have a climate disclosure framework in New Zealand, which is mandatory. That means it's more advanced than many other countries because it's mandatory. But we also have nature and a few other things coming that are going to to push through certain behavior in the corporate sector. What I put here on the graph, this is actually the debt level in agriculture, the loan. This is what the Reserve Bank publishes and tracks. So you can see here, and I'm sorry, I think I lost the legend somewhere there. At the bottom are the loans to the farming community that are only paying interest. So you can see that it's coming, that number, only paying interest at the top. So that number is going up. Why? Because there's been a lot of hardship. And those that are actually paying interest and principal, the number has been going down after COVID and so on. Why I'm saying this is because when we talk about why do farmers don't change, are they because they are stubborn and, not willing to engage? Is because they have certain financial circumstances. And we know from research that actually cash flow it's a big obstacle to change. It's not about how big is the farm and how big is the knowledge and so on. It's actually, you don't have the ability to pay for it. So in that respect, I hold the view that, it's actually, I don't think subsidies would be such a bad idea in some cases, if we get an outcome that serves a wider societal purpose. And we can see from that, while we know now that the interest rates are actually, balancing out, and will provide some, and there's been amazing payments for dairy farmers in particular, will give them some buffer. They're not necessarily going to go out tomorrow and start investing in restoration and natural capital, because they still have lots of challenges over the next 2-3 years. And right now, where we are in terms of climate and so on, we don't have that much time. So, these things matter. One thing, and I believe is connecting a little bit, I didn't realize that the Aotearoa Circle has done studies looking at the gene technology. This report came out just yesterday or the day before. Many of you know that we're having now these conversations in New Zealand around the regulation of gene technology. And there will be arguments for, and there will be arguments against. And we need evidence, I would say, from both side of the argument. And this is a useful report to have a look at, produced by NZIER, because it's analyzing, through economic lenses, is this a smart thing to do? Because we shouldn't at times, we don't do any policy progress at all, and in other cases we move very fast with policy without sufficient evidence and analysis. This is part of the work that I think is pretty critical to inform policy changes that will really have a massive implication for agriculture and land use, the resilience in the sector and so on. And now I'm going to go very quickly through some of the stuff that we worked as an organization or we observed in terms of trying to get somewhere on the solution side of things. And I'll start with this because I think it links in so nicely with Alison and the work. And actually, when I prepared this a few years back, was linked to Rotorua. I was doing work in Rotorua at the time where land use change was being pursued. Which is this, proposition, if you want, in terms of how we do economy. New Zealand, it's in terms of, knowledge and so on, we are a leader in conservation knowledge. We don't always, achieve the outcomes and so on, but there is deep knowledge within New Zealand, I would say research community, academic, community groups, and so on. So it's the question, how do we actually combine that conservation knowledge and passion, I would say, with what we can achieve in our productive landscapes? How can we give actually rise to the sort of economy that you're proposing, Angela? It's a new thinking. And that's really, by and large, where we need to work, because we know the national and international markets. I moved to New Zealand where we were talking about food miles, and this is why New Zealand started doing a lot of carbon accounting 20 years ago, because we thought we were going to be pushed out of European, UK markets at the time. So we kind of follow that obsessively, right? What happens internationally. But what we need to do is actually grow our local, this intermediate, I don't even know how to call it. That's what we need as a society. We need to change this and create more opportunities at this middle level, not ignoring the export market, because clearly it's a power engine for New Zealand's economy, but it's about giving priority to our local economies, which we don't. We don't in policy, we don't in terms of investment. It's really not on the radar, right? So it's not as simple as I would say, let's work with private sector, we're going to make this happen. It actually does require much deeper policy and, government thinking in that way. And we don't have that. We don't have local food strategies. We don't have local food hubs. All of this great stuff that you're talking earlier, it's still for us a bit of an academic exercise, but it's really well understood in other parts of the world and well practiced. So another, a bit of wisdom. We don't have to reinvent the wheel, as well at times. We can just take what others need. To kind of make this type of, support this type of new economy to emerge. And I think Bay of Plenty analysis is really amazing because it kind of brings to the surface some insights that hopefully will lead to useful discussions. We need to think in terms of what else, what knowledge is needed on the science side. And there are lots of things because, to bring investment, you need measurement. If we talk natural capital, again, there's different type of science and measurement that we need. But it's also about the economics and finance. And I've listed actually under the economics and finance, nature credits and nature markets as part of that, because they can play a role in these local economies as well. Quite often our biodiversity solutions are not going to be across New Zealand because the issues faced in Northland are not the same with what's happening in Southland. So it really is, this is a concept, if you want, that underpins a lot of the thinking that we do when we think about investment opportunities. And at the base of it is natural capital, simply because we had the topic of discussing natural capital. But I would say it's about all capitals. We cannot build this new type of economy by focusing, at just finance and not natural or only natural capital. We have to look at the social capital. We have to look at our skills and so on. And this is a little bit just to illustrate the connection between our natural capital and natural assets and how those provide benefits to all of us. How do they actually, enable through ecosystem services? They enabled the emergence of a new economy. And if you remember my first slide, and if I would like to connect to this point of resilience, by drawing down on our natural capital and by degrading it, our resilience is actually decreasing as well. Hence, it hasn't been that easy to recover after the cyclone. It's been quite costly, and some changes are irreversible because of mistakes in planning and so on. On the positive side, let's look, at nature markets and nature credits. The way I look at this is that we need to activate new revenue streams to support, to finance the solutions that we need to be put in place, knowing that the government is pretty tight with the coffers. And it's not to do that now we have a national government, or I think any government that will come, they will do the same. They will look at the revenue, they will look at expenses, and they will have to prioritize, and they will be tight. Hopefully not austerity tight. Therefore, our job is really to think, well, what other revenues? How do we generate new revenue? Because no retirement fund, no well-intended Kiwi saver is going to be able to put money into wetlands restoration if there is no revenue. It's kind of a simple thing. They want to do the right thing, and we've had discussions and on the side, but we need the revenue models. So hence nature credits is just but one of those opportunities. Will it make a huge difference? Is it the make or break? Perhaps not, but it's part of what we can explore in terms of, a new way of looking at things. And it's a wild world out there, I would say. In New Zealand, we have very, very little experience with voluntary market, almost zero, I would say. And the reason being is because we've been so invested in the compliance market linked to forestry that we just didn't have the ability to kind of make room for other experimentations. So again, it's a bit of an opportunity space to say what is it that we can do in terms of voluntary nature-based credits, whether it's biodiversity linked or carbon, at different scales. Not everything is going to be 3,000 hectares of forest assets in ETS. So how do we come up with these solutions that are much more scale, and they will make maybe a difference to the farmer that has got only 10 hectares, but they want to keep, 2 hectares in wetlands and bush, and we have to find ways to recognize that value. This is kind of classic, investor thinking. This is what we heard when we did research and we engaged with quite a wide range of finance folks, institutional finance, pension funds. We talked to impact investors. We talked to philanthropists that like to spend money. So getting this balance right between, risk adjusted returns, but also the impact. We know for a fact that there are lots of projects out there where the investors want to put money into the projects, but not necessarily pay for the impact. They want to see the impact happening, but not necessarily pay for it, right? So it's a bit of a mind shift that needs to happen with finance institutions as well. But we have the ability, those that work on environment, communities, and so on. How do we make those finances easy to flow to resolve the issues that we identify in the community? And this is why we need all this work around how do we align the timeframes. Ecosystems don't recover within a 5-year exit strategy, which is a lot of what investors are looking at. How do we line up this kind of conversations from different parts, coming at a solution, but from different angles? There is recognition that actually climate change will have a material impact on the economy. I think none of the investors, anyone that talks banks and so on, that have huge agricultural portfolios in New Zealand, if anything, what I hear is that they often say farmers don't really understand what's coming. That's kind of the sort of the narrative. The challenges are really huge, and I think even the numbers that you're showing are concerning. Like, there will be really a material impact happening very fast because of droughts, extreme events, the disturbances in the market. Finance sector seems, I think, and investors start recognizing that, not always really well placed or with the right knowledge to assess the risk, and put numbers and so on, but they are watching the space. So some positive things. What is New Zealand trying to do? There are quite a few of what was been long-run conservation groups that are starting thinking themselves, how do they actually generate new revenue to support conservation, to support protection of nature, and so on, because that's another part of our society that is under stress at the moment. So I'm in a board of an environmental group in Auckland for many years. Really, it's very hard to get money for projects these days. For a long time, I would have gone around and say, oh, this is so difficult. Community groups have to fundraise for their useful work in the community, project by project. Now, quite often, it's not even that available to them anymore because, the financial crisis, the cost of living, and so on. So quite a few of them are starting themselves to say, hey, is there some, tangible reality to these nature credits? Can we generate some small revenue? And this is an example in Waituna, Ramsar side, high value for New Zealand, important taonga for iwi. Thinking through how could, how could a nature type credit and mechanism support land use change? Essentially, we're talking about creating a buffer around Waituna Lagoon, but potentially also going up in the catchment where, there is land that maybe could be put into wetlands, into native forest, and so on. So there are explorations. We still don't know which pathway do we go. Do we go a carbon pathway because the voluntary market at the moment is not that good, or do we go a biodiversity pathway? If we go biodiversity pathway, it requires a lot of biodiversity and ecological knowledge because we don't have agreed units of measurement. We don't have ability to, commodification, as is being called. We don't have that. It's easy to kind of pitch carbon because we measure it the same way. But the thinking, it's happening. This is something that we're trying to work on, we as in Envirostat, with collaborators. It's still very early days in Hauraki Gulf, another ecosystem that it represents a lot for us in New Zealand, and it's faced with a lot of loss of function and a lot of degradation. We lost a lot of kelp forest, which is useful in more than a single way, and we're trying to figure out a way of actually dealing with Kina barrens to recover kelp forest and see whether that can be, monetized in some ways, because to restore Kina barrens is expensive, it's skilled. You're talking about quite dangerous, working in water and so on. Other things that are happening, Toha East Coast Exchange, they are doing some interesting stuff on the East Coast, trying to, again, it's almost like a crowdfunding in some ways exercise to drive finance towards farm restoration, riparian planting, pest control, and so on. And this was also a project where it's one of the first, I would say, prototypes in New Zealand where Mangathatri Sanctuary issued this sustainable development units a couple of years ago, was the first of in New Zealand. There hasn't been, I think, a rush to the reserve to go and ask for more credits, but it's part of this exploration and experimentation. And there was a corporate, I think it's a window maker in Waipa area, close to where the reserve is, that bought those units and therefore, provided financial support. This is another, so I talked about this nature credits, nature market, and the examples I've given. In our case, we also explored can we use a different type of investment instrument? And we did some work on organic dairy conversion as a way to limit environmental loads and impacts at the catchment level. This is in higher Waipa catchment. And we've designed this hybrid environmental agri-emissions bond. Again, that was underpinned by economic environmental analysis, but we're thinking, how do we bring capital to bear to accelerate land use? And our proposition was really to go above and beyond what can be achieved through policy regulation. So majority everywhere in New Zealand, we have targets for freshwater, sediment, and so on. There are a few details here, but I won't go through to them. This is more to say that actually through careful planning and management at farm levels and diversification, which often requires knowledge that is not always easy to get by. But with that type of careful planning, where actually ecosystems are being prioritized on farm, and there is a value put to them as well, we can achieve significant environmental mitigation and increase really of ecosystem connectivity and so on, without farmers having to leave farms. So this idea that we can have mosaic of land use and land cover and still maintain farm ownership if so wished, it's possible. And we've done a lot of financial economic analysis that shows that. And this level of environmental mitigation. I should say, when we did this analysis, and will be about 5 years now in Waipa, we didn't even have, so everything was financially viable. We didn't even have to drive the price of carbon through the farm. We did drive the price of carbon, but we didn't put a carbon value to the sequestration through the afforestation. Right, so because we thought, okay, if there is no voluntary market, let's not even make the assumption that you can, unless you go under ETS, and we didn't meet the conditions at the time because of the area and whatever. So even without that revenue, this type of transformation is actually viable economically, but it requires a lot of planning. It requires, longer term view, and it does require startup capital to do that. I've actually thrown, and I'm sorry, I've gone really fast. 1 minute and I'm closed. I've only thrown this true cost accounting because of the conversation earlier. I think couple of people raised this issue of true cost accounting, and I think especially Angela and Alison, the work you've done. We really lack this, visibility of cost of the food system in New Zealand and agriculture. We tend to often in our analysis, put quite high the positive externalities, but not account for negative externalities quite often. But really, we don't use it as a tool in policy analysis and so on. This is something that, again, for us, if we want to, open minds and open eyes, make better policy decisions, it's a tool that we could use. And I love this. This is an example from Netherlands, actually, where they have some supermarkets where the goal of the supermarket owners is to have the true cost versus the sales cost for all the products that they have. And here you can see all of these products are products that have got their the sales cost as well as the true cost that is being calculated. So this is where, you can, if you buy coffee, if you don't use milk, is going to have a lower cost. Investing in natural capital, and I think I'm going to stop here, Alan. I'm sorry, it took a little bit. based on the experience we've had today and conversations and so on, these are kind of what we consider to be sort of the key issues, not necessarily challenges, but aspects to consider. Like this idea that we need new revenues while we're looking at nature markets and so on is one. The ability to scale, and I really rush to say scale, but by scaling, we don't always think of large things that make economic sense. It's also about replicating in a way that we achieve scale, but it's not about, generating the next 1,000 hectares farm. That's not the idea with it. Collateral, I would say, in terms of businesses, collateral, you can't have collateral if you're a Iwi trust where the land cannot be used as collateral. Collateral often as a risk mitigation strategy, from what we've seen looking at the nature side of things, it means be clear on the cash flow and be clear on offtake agreements. Even for nature credits, it's always considered a benefit if you have those things in place. And then, of course, ability to measure and to develop the project pipeline. I mentioned earlier that we are not experimenting enough in this new way of looking at things where nature is an asset. We don't have projects, we don't have prototypes, we can't just say, oh, we need this investment, we need these resources. We actually have to come up with how would we spend that money? What is the project pipeline? Do we understand profiles of return and so on? And this is a job that, while I believe the finance and investment sector can guide, is going to come from us because we understand, and the community, broadly speaking, we understand where the needs are and we understand what it means solutions. So that this focus on project pipeline to support nature recovery and nature investment is kind of a bit of a mission. Thank you. Sorry that hopefully I didn't